Wondering how crypto taxes work in Canada? What's taxable? Which forms do you need? And how much might you owe? In this updated 2025 guide, I'll show you exactly how crypto is taxed by the CRA, what's changed, and a simple workflow to file with confidence before the April 30th deadline. Before we go any further, this video is for general information only and should not be taken as financial, investment, or tax advice. Always do your own research and consult with a qualified professional before making trades or tax reporting decisions. Hello, I'm Nelly from Koinly. Since our last Canada guide, the CRA has continued tightening enforcement, clarified how it tracks exchange data, and reminded investors about the adjusted cost basis and the superficial loss rule. So let's keep this simple. 5 things you must know first in 2025. Yes, crypto is taxed in Canada. Crypto is a commodity. You'll be taxed either on business income or as capital gains, depending on your activity. Capital gains versus business income matters. So what is a capital gain? You pay tax on half the gain at your federal plus provincial rates. Business income, you pay on all profit. Frequent, profit-motivated, or commercial activity can tip you into business income. Sub-crypto is income when received. Getting paid in crypto, mining, staking, certain DeFi rewards, selling NFTs you created, these can be income on receipt. The CRA can track crypto. Exchanges share KYC data, large transactions are reported, and FinTrack registration ties IDs to exchange accounts. Assume your activity is visible. Keep spotless records. Some deadlines to keep in mind. Canadian tax year is January 1st to December 31st. File by April 30th. Self-employed, file by June 15th, but amounts due April 30th. Okay, so what's new and notable for 2025? Exchange data sharing continues. CRA works with registered platforms to match KYC and activity with returns. Inclusion rate change coming for 2026. For individuals with annual capital gains more than $250,000, the inclusion rate above that threshold is slated to rise from 1/2 to 2/3. And this is obviously not for 2025 filing, but plan ahead. Audit activity. CRA has sent crypto questionnaires and audit letters. Keep ABC/superficial loss documentation tight. Okay, so how is crypto taxed in Canada? Crypto equals commodity. Tax depends on whether a transaction is capital or business. Capital, disposals. So sell for CAD, trade crypto to crypto, spend, gift, all trigger a capital gain or loss. You pay tax on 50% of the net gain at federal plus provincial rates. Okay, let's talk about business income, trader, miner, or creator. If your activity is commercial, profit motivated, regular/repetitive, or promoted, profits are business income and 100% taxable. Let's talk about income on receipt. Getting paid in crypto, mining, staking rewards, referral bonuses, selling an NFT you created, and many DeFi earn tokens generally equal income when received. Later disposal will turn into a capital gain/loss from that basis. Okay, let's talk about calculating gains, losses, and income. The first thing to understand is the adjusted cost basis, the ABC. Canada uses the ABC/average cost across identical assets and allows adding related fees to cost basis. The next thing to understand is the capital gain/loss. Proceeds minus ABC at disposition equal the gain/loss. Only 50% of the net gains are taxable. Okay, moving on to airdrops and hard forks for individuals. Often no income on receipt. Cost basis equals $0. When you dispose, the entire proceeds are a capital gain, then 50% inclusion. Okay, the superficial loss rule or the wash sale prevention. If you buy back identical property within 30 days before/after you sell at a loss and still hold it at day 30, the loss is denied. Okay, with all of that technical stuff out of the way, let's talk about some common scenarios. What's taxed and what isn't? These are the things that are taxed usually. Selling for CAD, trading crypto to crypto, spending crypto, mining, staking paid in crypto, LP tokens/DeFi trades, gifting crypto. Okay, those are the things that are taxed, so what is not taxed? Buying with fiat, hodling, and moving between your own wallets. Okay, let's jump into reporting, what to file. So for capital gains and losses, you have the Schedule 3 on your T1 return. For crypto income, you report on your T1 as income. So what are some key dates to remember? Returns open from February 2026 for the 2025 tax year. They're due April 30th, 2026 for most people. If you're self-employed, they're due June 15th, but amounts are due April 30th. Okay, you have a lot of important information there. Let's talk about the step-by-step how to actually do your crypto taxes with Koinly. So number one, sign up for free. In the menu setting, make sure to select Canada/CAD. For the cost basis, Koinly uses the adjusted cost basis with the superficial loss rule. This is the CRA approved method, so you don't need to change it. Connect everything. Koinly supports 1,000 plus exchanges, wallets, chains via the API/CSV. Then let Koinly crunch it. ABC per asset, every disposition, income, FMV, fees, and summaries. Then you want to head over to the tax summary area where you can review the net capital gains, income fees, and so on. Once you're happy with that, you can download reports, so the pre-filled Schedule 3. For users that use TurboTax, we have specific files that you can download and import directly into TurboTax. Then you'll want to file or send to your accountant, or if you're filing by yourself, you'll want to submit through whatever application you're using. Okay, moving on to DeFi's, NFTs, DAOs, and more. These are some things that not every user will be dealing with, but it is still information that is important if you are. So when talking about DeFi's, earning new LP tokens is likely a income. Swapping LP token trades are dispositions, which means they will trigger a capital gain. In terms of mining, there is two different kinds of mining. So if you're a hobbyist, no income on receipt, disposal later will turn into a capital gain. If you are a business, then inventory valuation rules do apply. Income fully taxable and expenses are deductible. When talking about staking, it's likely an income on receipt, then capital gains at disposition. NFTs, so creators selling their NFTs is going to be a business income. If you're trading/gifting NFTs, a non-business, then when you have a disposition, it'll be a capital gain or loss. Moving on to DAOs, they're often treated like flow-through. Amounts distributed may be income. Token disposals will turn into a capital gain. Okay, this next section is just called losses, fees, and tricky bits. So capital losses can offset capital gains. Excess can also be carried forward. We've talked about the superficial loss rule, so can deny loss if you repurchase within 30 plus days and still hold, so make sure to document everything carefully. Moving on to transfer fees. Paying fees in crypto can itself be a disposition. CRA hasn't clearly allowed adding wallet-to-wallet transfer fees to ABC, so be conservative and document. Lost or stolen crypto may be claimable as a capital loss with strong evidence, so obviously make sure to speak to a tax pro about that. Okay, moving on, we can talk about record keeping. So what does the CRA expect? Make sure to keep things for 6+ years, so dates, amounts, FMV in Canadian dollars, counterparties/wallets, exchange statements, fees, software costs, and notes on ABC/superficial loss calculations. And it's best to assume the CRA can reconcile your activity from exchange data. Alrighty, I know this was a long video, but there's a lot of useful information. If you want the latest up-to-date information, make sure to check out our blog, which is regularly updated by our content team. If you enjoyed this video, consider dropping a like, subscribing for more crypto content, and I'll see you next time. Peace.